Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Got equities pushing higher again. Risk sentiment is favorable. The banks are performing wonderfully. The XLF ETF's up 2%. So the S&P, it's out above our major three-star resistance, 2603, 2609.5. Now watch this on a closing basis. Yesterday didn't close out above there. There's a lot of resistance it's running into right now, 2623, and then we have another level above there. It's on the Morning Express, but the theme that the market is a little exhausted, it's refreshed on the pullbacks, and now, our worry was you have under-positioned portfolio managers that are now getting a little bit of a FOMO. You also had a lot of trapped shorts from around 2,500 and just below. So you're getting a lot of them calling uncle up here too. And so the market may not seem so exhausted, but this run, it's going to be tough to pick a top on. But overall, we still think there is a bit of exhaustion here. What we're watching, again, is that level on a closing basis, their major three-star level. And then the NASDAQ, you have the 50-day moving average at about 66, 69. Now, watch that number. It has not, it closed right there yesterday, but it has not closed above it going back to October 4th. So, we're hitting some pretty interesting levels, and then the S&P has a 50-day moving average just above, about 10 points above today's high. On top of all that, we're watching the XLF, 2540, where we are basically right now, is going to be a crucial retracement level to watch, and that's above its 50-day moving average on the daily. Today, it just kind of opened up out above there. Watch all of this. So we're at some pretty interesting inflection points, and you'll be surprised to see this hold ground over the next couple of trading sessions without some sort of pullback and refresher, and not making it very easy on the bulls, while also making those shorts tap out uncle already. So keep all of that in mind. There is a no confidence vote for Prime Minister May on that Brexit deal that she missed. One of the worst misses in modern British history. But no confidence vote today at 1 p.m. Central Time. Look out for that. The retail sales today canceled with the government shutdown. The beige book the Fed releases today at 1 p.m. Central Time as well. So watch all of that. Now moving on to crude oil, it's holding $52. Today's report, relative to the EIA expectations, was bearish. We're not getting any sort of drawdown here in inventories. But if you look at the composite number, it's right in line with that composite number we saw yesterday from API. The market's battling back. Healthy risk sentiment has helped all of this. But here's the interesting thing, is you saw 200,000 barrels per day on estimated production coming back online or being increased here on that report too. So that's also not favorable. But one thing that did stand out is that Cushing drew down about 750,000 barrels. And that's important because Cushing, as we've been talking about, 15 out of the last 16 weeks has built, and we're talking about large builds. So this is really the first big drawdown we've seen in 16, 17 weeks. So that's pretty crucial. That's kind of helping sentiment as well there in crude oil. But watch, we have a good resistance level up here above 52. We are and have had a light bullish bias on a technical basis, looking for a cup and handle formation here on crude oil. So the fundamentals, although we don't find those very favorable, the technicals have been favorable. And we were buying crude oil at our desk yesterday with any clients that we're talking to, told clients to call in and talk to us about the bullish technical pattern. So today's lows now would be that line in the sand. It must hold in order to hold that uptrend and continue to lay that groundwork for a bullish cup and handle. Still a lot of overhead resistance, so keep that in mind. Now lastly, you got the dollar. Dollar's running into a trend line, dollar index. We'll talk about that later today more on the FX rundown. You're getting some pushes obviously with the British pound, the euro moving, comments from Draghi yesterday also on top of that stuff. But don't forget, yesterday, New York Empire State Manufacturing was the lowest level since going back to last 2017, May 2017, and then on top of that, PPI miss. So this is all not favorable for the dollar. Got to remember all of this when the dollar is rallying. There's some good trendline resistance. Keep that in mind. Gold has been a really solid performer. Very resilient. You saw Treasury prices take a hit. Treasury prices have not taken out the support level we've been referencing to. In fact, we see a lot of value in the 30-year down at 144 and the 10-year down at 121. So remember all that. But gold, given the pullback in the Treasuries, the strength in the dollar, a little weakness in the yen, gold has been extremely resilient. It looks like it's going to want to try and get out above 1,300. We don't think the dollar will hold this ground, and this is going to be very favorable for gold. Now, on top of that, imagine if the equity market stalls out a bit. Gold is going to be primed to get out above 1,300 and move to 1,315. We like capitalizing on strength, so if it does get that big spike, you know, about 10 bucks higher, out above 1,300, out above that recent high, make sure to capitalize on it. Give us a call. We're here to talk about anything on the board and help with any type of strategy you're looking to execute. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.